In the energy quadrant today, June crude oil spent the day dropping from 1 month highs, getting above 64 in that June contract. 64.38 was the high. That was up 1.5% and then falling over 3% down into the low $61 handle. That $64 jump came on the declaration by Libya of a force majeure on exports from the port of Hariga and said it could extend measures to other facilities, citing a budget dispute. Hariga is scheduled to load about 180,000 barrels per day in the month of April. Now, Libya has not been a problem for OPEC. They've been exempt from some of the production cuts as they kind of recover their oil industry, and this is taking a decent chunk out. But overall, the pandemic surge that we're seeing in Asia really took over and caused that drop in prices that we saw for the majority of today. Those demand worries sprung from a pandemic surge mainly in Asia, specifically in Japan. The mayors of Tokyo and Osaka want a state of emergency declared as Japan battles surging virus cases and a slow vaccine rollout. That's putting some demand worries into the market and causing most of the sell-off that we saw today. But on top of that, Iran has been a problem for OPEC and continues to be. Yesterday, we got news that China had signed a long-term investment deal with Iran for discounted crude oil. Now, Iran, obviously, according to U.S. sanctions at least, is not supposed to be able to export much, but they're back near that 2 million barrel a day level, and it's been done kind of quietly on unmarked ships and ships marked by other countries, going mainly to China, who is, of course, one of the largest buyers of crude oil. And this discounted crude has caused Saudi Arabia and Russia to discount their prices to other Asian customers. So overall, it's been a bit of a headwind for crude oil in general.